Welcome, everybody. Okay.
Good afternoon.
Good afternoon, everybody. Welcome to this the week 2 of the JIIPCC Academic Mentorship and Internship Program, the FinTech. And my name is Omolayo Olonshola, and I will be your moderator for this section. So our topic for today's section is commercial development of FinTech, open banking, embedded finance, and the world of payment. I know this section is going to be loaded with so much information because we have 3 intelligent and very wonderful mentors that will take us through this section, right? So I believe that we'll learn so much, and I would advise everybody, all the mentees, to please take down your pen, your paper, anything you use to jot down information, to be able to take this information, as it is being given out to us by our mentors. I also like to welcome our 3 mentors. I don't know if all of them are, the 3 mentors are here already, but I would like to, okay, I can see Kamalika. I'm sorry if I'm not pronouncing it well. Okay.
It's
I don't know if the
Kamalika.
3 of them are there. Kamalika, okay. 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 Nice meeting you. Okay, so I will be reading their profiles one after the other. I'll be reading their profiles one after the other, probably before the others will join us. The other mentors will join us. Please, can you share the slide for their profiles? Okay.
Can you see my screen?
Okay. Yes, I can. Yes, I can. Okay, so I'll be reading the profile of George Onyewuchi first. So he currently heads the FinTech engagement of Force Bank, wow, and its subsidiaries across Africa at its digital innovation lab, setting up and driving the bank's FinTech strategy. George is a link that connects technology, business, and ecosystem partnerships. He's at the intersection of product, partnership, and ecosystem building. Wow. He has led the tech solutions product development for the SME banking business of a leading commercial bank, and has taken numerous financial and non-financial products from idea to market and growth. He has led digital transformation in the client engagement processes for leading commercial bank, including one of the Nigeria banking industry first end-to-end account opening for corporate accounts and SME digital lending. His team has won numerous awards for powering growth of SMEs. I'm very sure this person is very loaded for us. Please don't even hesitate to write down anything, like get very valuable information from this person. He also provides advisory for CRIP Africa towards developing blockchain infrastructure and building the operating system for African businesses on the blockchain, and hosts knowledge sections on blockchain applications to various industries within the African context. So this is George Onyewuchi, and I'm very sure that learning about this profile, you should know that this person is loaded. Please let me, the next person, please. Okay, so I'll be going to Kamalika. I'm sorry if I'm not pronouncing it well. She has spent over a decade building some 0 to 1 FinTech journeys like the Unified Payment Interface, or UPL, Open Finance, and New Banking Platform in India. Wow. She's a prolific blogger and runs a weekly FinTech newsletter called the FinTech Chronicler, which has led her to the title of LinkedIn Top Voices twice, and top 12 globally AI and finance influencers by Data Reels, recognized by the Reserve Bank of India for her contribution to open finance in India. She was recently recognized as upcoming FinTech leader at the Bharat Finance Summit. This is another very intelligent mentor that we have today. Okay, the next person. Okay, Our third mentee for today is Gretchen. Gretchen is an entrepreneur-minded product leader with experience designing and launching global financial and non-financial financial products in multiple areas, such as e-commerce, payments, cybersecurity, identity, and trust. Wow. With 10 years of experience in the industry, she has worked with various e-commerce platforms and payment systems across the world, witnessing firsthand the transformative power they hold in today's digital landscape. Our journey has allowed her to develop a deep understanding of the intricacies involved in crafting seamless online shopping experiences and secure payment processes for customers worldwide. She also currently holds head of payment position at TD Bank. So welcome all our mentors for these sessions, and I'll be calling our first mentor to give us an introduction into the topic and also, basically share their knowledge with us. So I think the person we have on call now, I'm not sure if the other three mentors are there. So I think we will go with Kamalika first, so that while we expect the others. So we have about 20 minutes for her to, please don't allow the 20 minutes to wait. I need you to take it very seriously and achieve as much thing as you can achieve. So Kamalika, please, you have the floor. Thank you.
Thank you so much. So I just thought I'll share a few quick and very interesting case studies that I've had the opportunity to work on when it comes to digital payments, embedded finance, and open finance. It's been like an incredible, I think the last 10, 12 years in the financial space has seen a very, it's been a brilliant journey in the last few years. So this is like a kind of a brief summary of what all we shall be covering. So when we talk about the evolution of finance, it's been a great journey so far. Like we started out with the barter system as like the primary payment system. And now we've come all the way to dealing and paying with cryptocurrencies and completely decentralized entities. So in a way, I think it kind of is going back in the loop like that, because the barter system too was fairly decentralized, and cryptocurrencies as well are taking that same barter system in a digital format and kind of decentralizing it and making it free of all sorts of central authorities over there. And I think with the emergence of new digital currencies like Bitcoin and a lot of others, it's kind of changing the game towards where we're thinking of, and I would love to hear the other mentors talk about this because they have an experience in blockchain. But it is really telling us that every asset that we have can be digitized, can be fractionalized, and you can trade in fractions of those assets. I think that's like it's an immensely amazing journey. But one of the places where in modern days, so let's not go so much back as to prehistoric man and his bartering system days, but in recent times, evolution of payments, the way that it has kind of built up, has been with, and that's like a success story coming right from Africa's Kenya, with e-wallets or mobile wallets. And really, I think the entire story of, and we'll cover that a little bit before in like a few minutes, but e-wallets and all the way up to using our mobile phones as a mean of doing any sorts of payments. We have mobile wallets today that we can scan and pay on. We have mobile wallets that are near field enabled to just tap and pay. In fact, just I think last week, Apple Pay rolled out their entire tap and pay product in the UK as well. That to now moving on to biometric based payment mechanism, because as we start evolving, the frauds and the crimes on digital payment were also going up. And so one of the areas where, and so people feel a little apprehensive about these modern tools of payments. So one of the future that I see picking up very well is biometric-based payment systems. And Amazon had run a pilot before where it was a little spooky, but still, where they would scan your entire palm, and you can use your palm to essentially make any payment. So I think that is something that we're moving towards in the coming few years. And I think 5 years down the line, the way that I see the payment scape evolving is to do a lot with quantum computing, simply because with quantum computers, our cryptographic algorithms will just get that much more better, that much more robust. And our payment transactions, which currently, if you see on the blockchain, even the most robust blockchain today, takes about 20 seconds to process payments. So I see a lot of that moving to the quantum computer, where it's going to be a lot more secure and it's going to be a lot more faster. So that's a little bit about how I see the payment scape kind of evolving. Of course, the current landscape that we have when it comes to payments, these are some of the most used technology that is there, which is encryption. How do you make sure that the data that's being transferred, the money that's being transmitted online, is end-to-end encrypted? Tokenization, to ensure that, even if I do breach into a third-party system, I'm not getting access to personally identifiable information. Those are just tokens that are stored there. And of course, authenticating these transactions and building up on better protocols and all of those. All right, so now coming to a case study of M-Pesa and UPI, I find them fairly similar in nature. But M-Pesa has been like a case study globally for everyone, who's interested in finance, simply because they found a very good user need that was there, which was that they realized people who were staying far away from their homes really wanted to send money in the most seamless way. But financial inclusion was pretty low. So rather than trusting, someone with their hard-earned cash to go all the way back to their villages and give the money to their loved ones, the easiest way for them was to actually top up their loved ones' accounts, their loved ones' phone prepaid accounts, and then they could call each other seamlessly. So that's how, M-Pesa's idea came up. It was to bridge the gap of financial inclusion. But I think today it's become a lot more than just financial inclusion. I think they're moving towards making sure that people are able to leverage the right kind of financial products for themselves. So M-Pesa has moved on from just making sure that there's a seamless way to transfer money back to your homes, to also using whatever transactional information they were having about their consumers to help them get access to better financial products at better terms. So that's something that I've kind of seen the evolution that's happening. And it's a beautiful case study, what M-Pesa has done for both financial inclusion and financial empowerment over there. A similar story kind of played out with UPI in India, and I was very fortunate in 2016 to be a part of the team that kind of conceptualized and launched this entire product in India. So UPI stands for Unified Payment Interface, and it's used by about 90% of Indians today. And there was this interesting case study which said that if you can get to 70% financial inclusion, you're able to raise the GDP of the country by 15 percentage points. So imagine India had a similar sort of a financial inclusion as what Africa has. It was hovering around a 20-25%. But with the government's push, so there were a bunch of things that happened from 2015 all the way up to 2018, so the first thing that the government did was to make sure that there was a proper digital public infrastructure for the most basic thing, which is your identity. So the entire identity layer was the first thing that got digitized and was maintained by a public infrastructure digitally over there. Then the next thing was to make sure that you have access to basic finance. By that, they meant a savings account or a checking account. So that was, again, it was called Jan Dhan Yojana. It was a policy that the government came up with at that point in time. And that took the financial inclusion umbrella from around 28% all the way up to 52%. And then after that, so now that we've covered the basics of banking, the next thing was to digitize or to make the economy as cashless as possible, which is where Unified Payment Interface sits on. And then the next layer that comes in is to make sure that most of your paperwork surrounding your financial services, all of that is also digitized. So that sits on a digital public infrastructure, which is known as the Digi Lockers for us in India. And finally, we have something called, you have access to all of this beautiful data and bank statements and money and all of that. But what if you want to get very targeted, personalized financial offering to you? But for that, you need to share information, right? So there's this entire consented architecture, which is the open finance architecture or account aggregator in India. And we'll talk about the the open finance implementation in just a bit, because it's slightly different from what it is in the rest of the world's implementation. But all of that has resulted in about an 80% financial inclusion. And the GDP in India has also, in the last 10 years, jumped almost. We've become the the fourth highest GDP in the world. So that's from all the way down from 8 to 4. So that's like a testament to how payments and digital financial inclusion can actually help increase the GDP of countries over there. So all of this was actually about a latent consumer need. So in the case of M-Pesa, it was that people wanted to safely send money back to their loved ones back home. In India, while most of the banking services were kind of sorted, the payments mechanism still had too much of friction. So the way that UPI was implemented, it built up upon the existing payment rails that were there, but they kind of abstracted it so that you don't have to remember those very long 25-digit bank account numbers anymore. All you need to remember is a virtual private address, which you can configure. So it's easier for you to remember. So if it's my virtual private address, I will probably name it something as simple as my mobile number or my name. And I can share that with anyone. And it's like an email address, right? You don't really need to write in the entire postal address and all of that. You just need that one memorable email address, and anyone can send you money from any part of the country. So that was, and of course, so there was like a friction in the system and the technological feasibility that was present. So two cases that I wanted to share with all of you on that. By the way, please do pause and ask questions if you feel I'm running a little too fast, because this is, after all, a session for all of you to come in, share your experiences and get your doubts cleared as well. Okay. So next up, we have embedded finance. Now, what really is embedded finance? For, I think, the longest time, finance or financial services, let's not say finance, financial services has been something that rested with clunky old banks. And they were very averse to using new technology, and they were very happy serving their own small customer segments that they had. Which meant that they were not really innovating for the needs of the unserved customers, simply because A, there was no incentive for them to do that, and B, it was a huge cost for which they probably did not have the talent to implement. So embedded finance, basically what embedded finance tries to do is it tries to integrate existing financial services into non-financial offerings. A classic example of embedded finance is an e-commerce app. Let's say that we buy a very expensive, the latest model of an iPhone today, and we want to be sure that our iPhone is secured, right? So you would see at the checkout page, a lot of the times, e-commerce applications, they do provide us with the ability to also add an insurance on top of most of our high purchase items. So that is embedded finance, because you didn't really realize that you were getting a service from an insurance provider at that point in time. That's how seamlessly it was tied into the entire e-commerce journey. Another example of an embedded finance offering is one that I think most people talk about nowadays, which is our favorite coffee place, which offers an app or a card through which you can do seamless payments. And I know all of you know about this. So Starbucks, a lot of people nowadays say Starbucks is not really a coffee place, but it's more like a bank, because that's how much of amount that people store in their Starbucks loyalty cards. So that's another place where embedded finance is used. So why was the need for embedded finance there? Because a lot of the times, the customers' needs that were there, the banks or the traditional financial institutions were not really able to reach them at the time of when they needed the products, or they were not able to reach them fast enough before they made that purchase decision, or before they took that action to do whatever, to buy or sell whatever that they wanted to do. So that's where I think there was, like we were talking about, friction in the system, right? So that's where there was sufficient friction in the system. And of course, if you see, a lot of embedded finance comes from or is being most implemented by technology players who have like a very solid understanding, or rather, more than understanding, I would say that they have a very good sense of what their customers want, simply because they're collecting that much of data on their customer through every interaction that the customer has on their application or on their website. So they're able to build out a good enough user persona using these alternate data. And when that is kind of juxtaposed with financial information that banks and insurance providers and I don't know, mutual fund houses and stockbrokers have on us, it creates a much better picture of what is it that the customer needs, when, and how do we reach out to them. So that's kind of where embedded finance. By the way, so in 2020, the embedded finance market had revenues of about 23 billion dollars. And that is projected by the end of 2030, in just 10 years, it's projected to grow almost 18 times to 390 billion. So embedded finance, in my opinion, is a huge potential that it's just waiting to be unlocked, and has a huge market opportunity for doing business over there. So we spoke about, how insurance in embedded finance works. Embedded banking is also another term where, for example, the entire Starbucks example that we were talking about is a form of embedded banking over there. I would more label it as embedded payments, but okay. We also have, for a lot of solopreneurs, people who are setting up one-person companies and are selling a lot of goods on Shopify or Etsy and stuff like that, you also have a product called Shopify Balance. So this allows the Shopify owner to actually, instead of waiting for the customer's funds or the customer's money to reach their bank balance, it credits it to their Shopify balance, and that is credited instantaneously. And within the Shopify ecosystem, these shop owners are allowed to make use of this balance to make other purchases or make other refunds, or to just kind of build up on their loyalty programs if they have any. So that's a very interesting example of embedded finance or embedded banking over there. We spoke about embedded payments and the Starbucks app over there, so let's not spend too much time over there. In India, an interesting application of embedded payments are the fast tags that we have implemented on our. So basically, every car in India has a fast tag or a small near field payment card that's kind of clipped onto every card that's there. And you can use this if you just top up. So these are basically wallets. There's a small chip that stores the amount that you have in your wallet, and you can top up your wallet from any mobile application, or even your bank's, even physically at a bank, or even on your bank's app as well. And any toll that you have to pay, a road tax that you have to pay, if you're paying any parking charges, all of that can get seamlessly debited from that small card that you have just stuck onto your car. So that's a very beautiful example of an embedded payment system. Then, of course, we have embedded lending. So how many of you are familiar with the concept of BNPL, or buy now, pay later? Just a small raise of hand. Yeah. All right. So buy now, pay later is probably the most visible form of embedded lending that's there in the world of e-commerce. So essentially what happens is if a consumer wants to buy a high ticket size item, like say something that costs about, I don't know, hundreds and thousands of dollars, and they don't really have the money today to pay for it, does that mean that they should not buy that product? No, of course not, because there's an easy solution called buy now, pay later. And what this does is it splits that entire $100,000 into chunks across, say, 6 to 12 months. That's a lot easier for people to manage their cash flows and for a lot easier for people to pay back and also buy those aspirational products that they were kind of just looking at and not buying anymore. So that's like the most visible form of buy now, or sorry, embedded lending that's there. Another interesting area, and this is something that I am personally working on currently, is embedded investing. So what our application, so I'm basically a part of the founding team of India's first digital platform for improving women's financial health. And what we are building is we're helping women to track their day-to-day spends that they have. We're helping them to form a budget that they have around for the month or the week. And every time they've curbed their spends to within the budget that they had for themselves, we're giving them a nudge and telling them that, okay, you've saved 100 rupee today. Why don't you put it into this, small fund that's there for you? It's a curated product that we've partnered with these mutual fund houses to bring just to you, and you can watch your savings grow. So every day or at the end of every week, whatever money that they've managed to save by just being financially prudent, all of that goes into another mutual fund periodically. And they also get to see that savings grow as well. So embedded investing, they don't really have to think actively about, oh, I have this much of money at the end of the month. Where do I put it in? Does it have to go into this sort of an asset or something that's a lot safer, like a gold bond or something that's debt related? None of that headache is there. They keep, every time they save, they just keep putting it into, like, so there used to be this old saying, right? Our mothers always save our money in the cookie jar. So yes, this is like a cookie jar that also helps with compounding your money. So that's again another great place where embedded finance is being used. I think going forward in the future, the way technology is evolving, embedded finance is going to be in our houses. I don't think we will have to think about bills in the future. We won't have to think about any of that because we're going to have smart homes that power our the entire house, and they would be tied to a wallet at the back end. And every time there is some payment that's due, it's just going to debit it from the wallet. And when your wallet balances go low, these smart devices are going to have that capability to let you know that, hey, Kamalika, your balance is low. You won't be able to pay your bills the next month if you don't top up. So I think that is something that's where embedded finance is going up to. Everything that we do in our houses, driving our cars to work, our school, the school fees that we have to pay, all of that, I think, is going to be completely embedded, completely invisible. And that's where I see the future going. It's very exciting. All right. So finally, we come to an area that I am very, very passionate about, which is all about open finance. Now, open finance in the UK, it started out in about 2016, I think, when they realized that a lot of the banks had a lot of data with them. And the fintechs that were there were figuring out conniving ways to get access to that data. While they could have, and there was obviously, so the way that fintechs were doing it was they were asking their customers to upload like bank statements and stuff like that. So there was obviously a lag in that. And you didn't also know the veracity of that data as well. So the lag and the veracity of the data was what regulators felt that it makes sense, right? All of the data that the banks have collected, is at the end of the day, the customer's data. So if they feel confident enough about sharing that data with another third-party fintech app who's giving them superior customer experience, then they should be allowed to do that. Not just that, with open finance coming in, there would be like a seamless way for customers to compare the financial offerings of different regulated entities and figure out the one that best suits their needs. But how do we go about doing that? It's very challenging to scrub the data from every single financial entity in the world, right? That is where these API standards came into play. So every regulated entity would expose some part of their product stack via APIs to the end, not to the end consumers, but to fintechs at the other end, to kind of seamlessly and securely pull that data out. So one, your data security is taken into concern. Two, you know the veracity of the data because it's coming straight from the source. And three, most implementations of open finance make sure that the customer is well informed that this information is being pulled out and that they've consented to this. So there are different implementations of open finance, broadly 3 different implementations of open finance that's there. One is a completely regulatory driven open finance implementation. The other one is completely market driven implementation that's there. So in the US, if you see especially, it's entirely market driven. You have the likes of Plaid and Yodlee, which are individually integrating with every bank and every financial service provider in the country in order to build those APIs out at their end and provide their customers that flexibility to kind of pull their data in one single dashboard of sorts. Whereas in India and even in UK, it's more of, it's a hybrid sort of a structure. So in India, while the API standards and the data security code was kind of laid out by the regulators, so there's a central body that just looks into all of this, the API standards and the data security protocols that are being used to encrypt and decrypt the data. The use cases for using open finance is left completely to the market participants. So in this way, it kind of makes sure that we're still allowing for innovative new concepts, innovative new financial products to come into the market. And we're also making sure that the customer's data is safeguarded because the regulators are building their entire API architecture and the data security protocols over there. Also, while in a lot of places, the implementation of open finance is also with the central regulatory body, in India, that is left to individual players who have to get a license from the regulators. And this license is called an account aggregator. An account is basically any financial account that you have. And account aggregators are they're all data blind. So all the data that they are sending from point A to point B is completely encrypted. And account aggregators can only see the encrypted data. They can never get access to seeing the raw data that's being transmitted. So that is one. Second one, the account aggregators also act as a customer's consent manager. So now if today, me as a customer, I have shared my information with, say, a fintech lending app, but tomorrow I don't really feel confident about him getting access to all my financial data. All I have to do is to go back to the account aggregator through which the fintech is pulling out this data and tell him that, hey, turn off this data tab. And that entire consent handling mechanism is in the hands of the customers because now they have a mechanism of ensuring that I want to share data only with entity A or I want to share data only with entity B. And that kind of builds a lot more trust for the end consumers as well. And for the ecosystem too, when they are developing new innovative fintech products, they're always keeping in mind that thought process that, you know what, customers have the ability to tell us no. And if they tell us no, that's bad for business, that's bad for trust. So I think that's one very interesting way in which, in India at least, we're going about building the entire open finance ecosystem. By the way, just last month, the end of February, we crossed 18 million new accounts being integrated on the open finance architecture. So I think it's a huge, huge win for the ecosystem and validating the work that we've been putting in for the last few years. So that's about it from my end. Over to the moderators.
Okay. Okay. Thank you so much, Kamalika. This is a very, very insightful, knowledge sharing section. I really appreciate it. And then we have the next mentor. I don't know if he's still on, Mr. George. I don't know if he's still on. Okay, I think he's not on yet. Probably we're just taking the presentations from the mentees, depending when they join us, depending when the other two mentors join us. Yes. So I will call on the first group. Group one, please come up with your presentation. You have just 10 minutes for your presentation. Thank you.
Group presenter, we can't hear you. Please, can you be more audible? Thank you. Group presenter, please, if you can hear. Yes, we can hear you now. Thank you.
Can you hear me?
Yes, we can. We can hear
Let me
you now.
try and share my screen. Okay, let me try and share my screen. Hello? Yes.
Yes, we can see your screen. You can go ahead.
Very well. Okay. Good day, everyone. Good day, everyone.
Good day.
Good day, Mr. Chinedum.
Yes. Okay. Yes. Our PowerPoint presentation is titled Commercial Developments of FinTech. Commercial development of FinTech concerns services that improve performance and service delivery. It now presently encompasses a wide range of segments, including savings, credit, loans, and payment services. Initially at the onset of FinTech, they were basically payment services platform, but now it has grown past that level. Now includes savings, credit, loans, and of course, payment services. This growth has been driven by mass adoption of financial services and great collaboration with the sector, which has, of course, helped facilitation of innovation. FinTech, by its nature, operates open banking system. Good open banking system. So FinTech, by its nature, operates open banking system. Then, what is open banking? Open banking is also known as open bank. By that, open access to customer transaction and financial data through the use of an application called API, Application Programming Interface. Now, regulatory framework. We are going to be concerned. We're going to be looking at it from a Nigerian context. The primary legislation for regulation of banks and other institutions in Nigeria is BOFI, Bank and Other Financial Institution Act. This act gives CBN, that is Central Bank of Nigeria, power to supervise and regulate banks and other financial institutions. There are also other laws and subsidiary legislation empowering other government agencies play a supporting or complementary function with CBN. But the BOFI, the Bank and Other Financial Institution Act, is the main law that regulates FinTech. Then we're looking at the security and privacy concerns of FinTech. Security and privacy concerns. One, we have phishing assault. Phishing assault is a cybersecurity issue. It comes, when you have maybe a communication, which comes like an email or a text message unsolicited. It comes to you, what it's actually a fraud with the maybe with intent to defraud you, because actually your data is out there. If it's not properly secured, it will fall into the hands of predators like cyber criminals. So phishing is a cyber security concern that comes in the use of FinTech products. Then we have data security. Because FinTech depends so much on data, it's also a concern how secure the data are. Yeah, the data are there. How secured are there? So it's an issue. Then privacy concerns. Adherence to regulation and standard. How far are these FinTechs adhere to regulation and standard? Where there are standard, if you come to Nigeria, we have a Nigeria Data Protection Act. That's the extant law that regulates data protection and privacy in Nigeria. So how far are these FinTechs, comply with these laws? Then giving control to customers. How far do customers have control over their data? Because that's the whole essence of data privacy. A customer should have control over his data. He has the right to give consent. He has the right to withdraw. He also has the right to know how his data is shared by with a third party. So how far do these FinTechs comply with data privacy protection? Then knowing your customer, KYC, it's another issue. It is expected of FinTech companies to know their customers. They do a background check. How far do they do this background check to know their customers to prevent potential fraud and data breach? Impact on traditional banking. As the FinTech has grown over the years, it has made a lot of impact on traditional banking. One of the impacts is now that customers now have access to their money anywhere. You can stay in the comfort of your room and know how much is the account. You can do transactions. You can do whatever you want to do. So that's one of the impacts FinTech has. Convenience, that all banking services are all in one place. All your banking services now can be in one place. Whatever number of accounts you want to do with an app or your cell phone, you can do that. Then lower fees. Fees are also moderately less, relatively less rather, by the use of FinTech, other than other banking or traditional banking services. So the fees are lower. But interest rate in fintech seems to be a bit higher for those who go into loan and loan services. So the interest rate seems to be a bit higher. So it's an impact, it's a concern as well. Then faster money transfer. Money can be transferred as fast as possible. Within a twinkle of an eye, you can move your money from a particular account to the other. So these are the benefits and the impacts. No paperwork, queue, or being put on hold on phone. You do not need to fill documents or queue at the banking hall to do transactions. Consumer adoption and trust. Trust is key to consumer adoption. Once trust is gained, adoption will be easier and faster. Customers will also feel free in giving consent for their data to be shared. With solid security and data protection, policy consumers adoption would record a high rise. So with trust gaining ground, because fintech is becoming very common now, so the trust are building and consumers are beginning to adopt the system. Consumers are also becoming savvy. Consumers are becoming tech savvy. Everybody now almost have a phone to do transactions. So they are adopting quickly to the fintech services. So that would be the end of our presentation. That would be the end of our presentation. Thank you very much.
Hi, Chinedum. I hope I'm pronouncing your name correctly.
Very well.
So I have a question. You
Yes.
mentioned about the open banking APIs or the application programming interfaces, right?
Yes.
In this presentation that you had, who maintains and upgrades these APIs?
Okay. The APIs I think is maintained by the fintech companies.
Okay.
Yes.
So the
Yes.
APIs are developed by the fintech companies, in which case my follow-up question to you, Chinedum, would be, why
Yes.
would banks and traditional financial institutions want to implement this API? Because it's essentially giving access to their data to a third party.
Yeah, that's where data privacy and protection comes in. The need to have technologies and systems that will protect those data of customers with that data subject. You need to have technologies in place and also observe the regulations according in Nigeria, in line with the Nigerian Data Protection Act.
Okay. So this is more of a regulatory push in that case, isn't it? Okay. So the third follow-up question to this, Chinedum, would be, don't you think it is adding pressure to the existing technical infrastructure of the bank? And how should the banks kind of manage maintaining their current tech infrastructure and implementing these fintechs API as well?
Yes, the banks ought to be up and doing, and they need to be up and doing so that they will always, not fall short of demands and the pressure from the fintech companies. We need to have a strong technical infrastructure, of course.
All right, I have no more questions, but great presentation. Thank you for that.
Thank you.
Okay, thank you so much to the presenter. Thank you very much. And please, since we don't have the other two mentees, I think we'll just take feedback from our mentor, the one present, Kamalika, please. Would like to have your feedback from their presentation. I know you asked the questions and then the clarifications from the presenter, but we still want more contribution from you and your feedback on their presentation. Thank you.
So I think the one thing that was missing was what I was asking questions on, right? What is the impetus for these banks and financial institutions to adopt these open banking APIs outside of just regulatory pressure coming in? So that is one thing that I would want people to think a lot more on. Second aspect would be the entire monetization capabilities of open banking. How should that happen? And who should pay what for each of these services? I think those were the two aspects that I would have liked to kind of see a little more clarity on. Then the third aspect is on, so these APIs that are there, if they're being maintained and managed by fintechs, then there is a possibility that they can create backdoors and hack into these banks. So, how are we talking about or thinking about the data security and the entire vulnerability assessment for the financial institutions? So that's more on the security and cryptography side of things. So this would probably just be my 3 observations, but the presentation was really, really very well put out over there.
Okay, thank you so much. Thank you so much. So it's time for question and answer. So if you have any question, please ask your question. You can just raise up your hand and then we can call you, or you can just drop it in the chat box and I can just read it out. Questions. Please do not use this time very wisely and ask her any question that you want to ask. Okay. I think everybody, are we saying we are okay with the presentation and what we have gotten from Kamalika? Or I don't understand. If you have questions, please. This is an opportunity for you. Ask questions, please. Ask questions. Okay, I think we are good then because nobody is answering questions or raising up their hand. So I think we are good. Thank you so much, Kamalika. Thank you for coming.
My pleasure.
Yes. Picture time, please. Can we all turn on our cameras so we can take our pictures? I think Jenny to take that. Will help me with that.
Yes, please, Chinedum, if it's possible, can you stop with the sharing of your screen? And I sincerely want to say thank you to Kamalika for joining in for today's session. My apologies that my own video is not turned on. The network conditions has been pretty poor in the past few days, so it doesn't necessarily afford me the chance to turn on my video without it logging me out. So I sincerely apologize for not putting on my video, and I think it's the same for quite a number of our mentees. They've been reporting issues as regards network. For those who are able to turn on their videos, please, we would like you to just kindly turn on your video so that we can take it as just a reference point to our posting, so that we can post and also share what we've learned on our different social media platforms, including LinkedIn. And please, I also like to encourage our mentees that are currently here that were able to stay through to the end, so that to just kindly follow our mentor Kamalika, right? So that you can also get updates. She constantly drops updates on engagements as pertaining the fintech industry. So please, I'd like to encourage our mentees to do that. Thank you very much. So we'll be taking our pictures quickly. Okay. Yes, thank you, Chinedum. Thank you. And to you, our moderator.
think we have the picture now already. I believe we are taking the picture.
Yes, I'm taking the pictures.
Okay. So so we have come to the end of today's section. Thank you so much to our mentor, Kamalika. Thank you so much for coming. And thank you to also our mentees. I heard that some are having issues joining in because it's actually been very crazy this week with network issues. So I totally understand. But I still want to encourage you to don't hesitate to still join next week for another important section. I believe this section was streamed, and I think it should be on YouTube. I don't know, or which other channel we can get to, so that anybody you can share with others. Anybody that have missed the session can at least, I think, can go to the probably YouTube channel to go there and just get whatever as he or she has missed. Right? I feel we can actually do that. So thank you so much, everybody. I think now we're going to join the curtain, and I will see you in next, or we'll come back next week. Thank you, everybody.
Thank you. Thanks for having me. Bye-bye.
Yeah, goodbye.
Bye.
Thank you, everybody. Yeah.